Well, welcome everybody to Behind the Capital Curtain. I'm your host, Dave Cotter, and I'm really excited today because I'm talking with Phil Tomlinson. Phil is a colleague of mine in the industry. He's with CPI. He's been in the industry for 25 years. So he's seen a few things around the block, and he focuses on working with accredited investors all over the country who are looking to enhance and expand their investments, and specifically in the area of commercial real estate. He has a partner, Eric Butler, and they tag team and are able to lease up, to acquire, to renovate, and assure that things continue to grow as investors are always looking to take it from one next to the next level. So we're really excited to have you on the show here today. Phil, thanks for joining us.
Dave, thanks for the invite. Appreciate it.
Well, I thought we would spend some time really getting into the area of stuckness. And I think you probably understand what this is because we've dealt with a lot of different clients, well-intentioned, but there's this idea that we go down the road and we get stuck. And I'll give an example that is on more of a personal front. Me and some friends years ago decided that we were going to go canyoneering in these slot canyons that are right on the border of Arizona and Utah. So I met my two friends up there. We walked into the ranger station and I asked the lady that's been doing this for 20 years, hey, we're thinking about doing the slot canyons right now. And she said, that's a bad idea. And I'll tell you why. And she proceeded to tell me about how much mud was down there, and the mud was up to your knees. And so I listened to her politely and nodded my head. And I walked out to my friends and I said, here's what the lady said. She has no idea what she's talking about. Let's go do that.
That sounds like you, Dave.
Yeah. And I proceeded to go down and we walked in and were just ransacked with mud for about 6 hours in this whole thing. Point I'm saying here is, number one, don't listen to me when I'm telling you to go canyoneering. That's the first rule of thumb. And the second thing is the same thing I think happens to people in the industry. They get stuck in the mud. They think this is the right direction to go. They are foggy about what it is. And there's really a couple of areas that I want you and I to maybe unpack a little bit. The first one is just confusion. What am I going to buy? What am I going to do? What does this look like? Where am I going to go get financing? There's just confusion as opposed to clarity is the first thing. The second thing is the numbers. There's just these weird expectations that maybe they have around what those numbers are going to look like, whether that's the cap rate or the yield on cost or the spread that they think they're going to get, or the leverage, whatever those numbers are, the expectations might be stuck. And the third one is time, right? How much time is this really going to take? I'm going to get it done in 20 days. Probably not. And then the final one is where to fish. Where am I going to fish to find deals? So what do you think about that? Anything to add or would you elaborate on that?
It's common. It's super common. In fact, one of the hardest questions that any of us have to answer, not just if you're looking for investments, but in life, is what do you want? And most of us really don't even know what we want. We want a good investment. We want a good return. We want something that looks great, that doesn't cost a ton of money to have to put in to get a return on it. But the hard part is if you're not too sure what you want, then you start looking at everything. And as a broker, that's a hard place for us to start with a client. So we typically have to sit down and walk them through, here's the 5 property types. If you had to gravitate towards something, what would you gravitate towards? Asking the question, have you ever owned something in the past? And if they haven't, then you're asking them, have you had relationships of somebody who's owned something like this in the past? And what stories did you hear? And so once we can figure out what they actually want, and then do you know what it's going to take to jump into a value add property? Sure. And they don't. And they're not positive exactly all the nuances and how much more money they have to put in.
Right.
And so you start figuring out what they really wanted was an investment that's clean. A good conversation to have is, what's important to you? Where are you at in your life? Or do you even want a physical property? I've got a group right now, they're selling a property and they're elderly. They're jumping into their late 70s And their comment to me was, can you find me a property where we don't have to really manage it or touch it or deal with it?
Yeah.
And I'm like, well, that might be a 721 or a
Yeah.
DST, right?
Yeah. I was going to
So
say that's a DST where you're just doing an UPREIT or something like that.
yeah,
I
exactly.
mean, do you think when it comes to helping, and again, a lot of times these are seasoned investors even, but helping them get clarity around what they're going after, how do you guide somebody to move in that direction? Where do you really want to end up at the end of the day? So it's like beginning with the end in mind. Like, what is this all going to look like at the
Yeah,
end?
the exit strategy. Yeah.
And then you're trying to back into it to say, now you're paring down to geographic things that might matter as well if you're wanting to make sure you can go kick the tires, which could make a difference. So do you have any particular process that you walk through with investors to help them hone in on that yourself?
Yeah. So what I ended up having to do is start taking some of my clients outside of Arizona
Mhm.
because as we sat down and we looked at exactly what do you want? How long do you plan on holding? For the clients that plan on holding, period. They don't plan on selling anything. They plan on giving everything to the next generation. We can get really dialed in on exactly what is the most important aspect for them. What do they want? It's not typically price per square foot. It ends up being a type of return. They don't care what the price per square foot is as long as the return is what they're looking for.
Mhm.
And to get some of the returns, we had one investor where we were showing him everything that was in Arizona. And he currently had his money tied up in a Goodwill up in Las Vegas. And he's like, this thing has so much hair. He goes, can you find me something better? Well, guess what? We couldn't find him exactly what he wanted in Arizona.
Huh.
So we had to take him to Pittsburgh, Kansas. Didn't even
Pittsburgh,
know
yeah, I've
that
never even
existed.
heard of that place.
I know, right? But there was a Freddy's Hamburgers, absolute net retail space across the street from the college. And he was able to get this one at a 7.5 cap with a 20-year lease on this Freddy's Hamburger. And he's like, all right, I love this. This is an
Yep.
opportunity. But he was really clear on what he wanted, what kind of legacy he was leaving, what he, but yeah, you sit down with the investor and you figure out, hey, what makes sense? So when we were looking at all the different things he wanted for him in a big retail shopping center, and we're like, listen, if Petco decides to go completely 100% online, they don't need
Yeah.
the big box
Yeah,
anymore.
for sure.
Who's going into this
Yeah.
space? And when I walked him through, here are all the people that would go into the space. It was going to be sitting on the market for a while. And
I
so I
think,
said, that's probably not the
yeah,
best use of your money.
I think what I'm hearing you say, which I agree with, is part of the reason you need to work with somebody who's got a little bit of gray hair. I have a lot more than you, by the way, is they have enough of the wisdom to be able to ask the tough questions and have the perspective to be able to say, this doesn't necessarily make sense for you to go down this road, and here's why. Or ask the tough questions. Is that the kind of tenant really you want to have? Because the risk profile is higher
Yep.
given the nature of the world we now live in with tech, that could absolutely get slandered. And also to be able to look at geographic constraints that might look like a great cap rate or might look good here, but what are the risks if it goes dark? All those
Yeah.
kinds of questions that I think give full circle to allow somebody to make the appropriate decision is super helpful to help somebody
Yeah.
get clarity. Now, my question on that too then goes to the second thing, which is the expectations and the numbers. What are some of the outlier expectations that you're hearing? I can certainly share mine, but I'd love to hear yours. What are you hearing people go, "Hey, I need this kind of return," or "I need this cap rate," or what are some of the outliers, would you say?
And it depends on the kind of market they're looking at. Somebody wants someone who's as stable as a Starbucks. but their cap rates that they need and what they can afford and what they want to get don't allow you to get that kind of a tenant. Also, they don't know the product market well enough. I get quite a few people that want to jump into multifamily and they're like, hey, I found a property I think is a great deal. There's a lot of strategy, a lot more questions goes into it. And a broker who is willing to sit down and tell their client that's just probably not a good direction is a good broker. You want someone who's going to challenge you a little bit
Yeah,
and
for
not
sure.
just say, oh, you've got the money and you like a project, let's put an offer in. And there's a lot of brokers I think that, if they don't know better, that they're willing to do that, but then later they find themselves where the client's unhappy. There were some things behind the scenes. There's another property that's on the market, and you're like, wow, this is like a 7.5 cap. But then you realize the broker didn't quite put everything in there. All the expenses were not fully in there. And when you run the numbers, truly run the numbers, and double check what they're providing on the financials, which hopefully you can get the financials. But when you get them, you realize this is closer to a 4.5 cap, not
Yep.
6 3/4. But if you didn't know better and know how to jump in and figure out what's behind the scenes, you could be taking your client down, a dark path that would be a lot of frustration later when all of a sudden they're not making the 6 3/4, they're making 4, right? That's not
That
not a good
gap
place.
of what they're expecting and reality tends to be wide. We see the same thing happen when we're underwriting a $20 million bridge loan and somebody says, oh, the yield on cost, which is the future NOI divided by the total cost,
Yeah.
it's a 9. And we go, okay, let's look at the numbers because I'm scratching my head going, that sounds a little too good to be true.
Yeah.
And then we
Woo.
look at the expense ratio, which ends up being 35% when it should be 50. And then their rent bumps that they think are going to go up to, 10% higher when you go, I don't think that really supports the market. And you start
Right.
to understand real fast how critical it is that the numbers, henceforth having somebody to really poke some holes in that and say, it looks good on a piece of paper, but in reality, you probably can't get those rents. In reality, those expenses are probably not realistic. And by the way, you're not really taking into consideration the deferred maintenance that you're going to have to do because it's a 1980s property and you're probably going to have
Yeah.
some plumbing that breaks. So just really knowing the numbers and diving into the details, the devil's in the details, I think is so important for investors to make sure that they're not stuck. Because as you well know, when they close, you just birthed a baby. You're in it and you've got this thing, and unwinding that now that you got debt on it and we're seeing this right now. You're seeing it too. I am. These guys that got in these deals, they paid a 3 cap, they had floating rate debt. Now they're underwater. All the investors got
Yep.
wiped out in their equity and they're having to sell it for the debt. And it's a super scary situation.
Yeah. We've had a few transactions where we literally are coming in and the person who's selling is losing $6 million.
Mm.
They bought it for 12 and now they're turning around and selling it just under 6. And you're like, that's hard to swallow. But at this point, if you're at a position where, you got to make a move and you got to get it off your shoulders, that's what you're doing. The other thing too that is interesting is you want to find out who's selling the building and is the person who's selling the actual tenant. And so we see this a lot where a tenant will say, what is the range of the market? And so the range is, let's say, $22 to $36 triple net, right? Per square foot. And so they are selling a building and you're looking at the cap rate and you're like, well, this is a decent cap rate. Building looks decent. They're doing a 15, maybe even a 20-year, lease back. But then you realize for this building, the average rents are 24, but the tenant who's selling the building has put their rate at $36 a square foot.
Sure. Yeah.
And of course, so now this buyer is seeing, wow, what a great rate, what a great return. I mean, they got a longevity for, so many years. But it's like if something changes, so now on paper, You've got to now figure out to find another tenant at 36 to meet the cap rate you wanted. And you're going to probably lease it back at 24. And so you just lost everything you thought you were getting. And now you're into a 3 and 4 cap, which doesn't make sense at all. And nobody would have bought that. But, if you're looking at, well, what's the range in the market? You're like, hey, it's in the range. That makes sense.
Yeah.
Kind
Ish.
of does.
Always ish.
If we're looking closer to the actual building or the surrounding buildings by it versus a demographic in a certain part of town.
We've seen similar type of situations. It's a really good topic to park on, as well as knowing your numbers and doing your due diligence. We've seen people buy and they went, oh gosh, the rent roll's this, it looks great. And then they found out after the fact that half the tenants were shoved in there, bad tenants, had crappy credit, and then they just started going into default. So really doing the homework to understand how secure those rents are, substantive, if it's really relative to market, is
Yep.
such a huge deal. Because your point, you could be artificial and be the owner of that. You put whatever rent you want. But as you and I both know, the appraiser comes in and says, well, I appreciate that you're 32, but the market is 27.
Yeah.
And so we don't really care where you are because we're going to bring that back down to what we believe market is. And the lenders are going to do that as well. They need to know that this rental rate is actually within the alignment of the market because they're looking at it from the perspective of saying, if I foreclose on this property and take it back, I'm going to have to release it at what would be considered market. And so that's another point I think to educate and make sure people are aware of. It doesn't really matter what rent you go in there. It matters what is the market bear and also the price per foot that you're going to
Yep.
pay, that the market bears that. All those things are commensurate with making sure that you're buying something in a deal that makes economic sense for people. And that brings me to the third point, which is time. How many times have you had somebody say, I got to get this done in 30 days or less? And you go, okay, that's probably unrealistic.
Well, if you're involved,
Yeah.
like any kind of a bank, any kind of a lender, yeah, unless it's, the cash deals, maybe you can
Yeah,
get
for
in a,
sure. Yeah.
15, 30 days.
Yep.
But yeah, we tell all of our clients having any kind of institution involved here, probably at 90 would be an
Yeah.
average.
Yeah.
And then that just gives everybody enough time to get everything across the finish line. And of course, it depends on if you're going to do an inspection, and you're going to get appraisal. They used to take maybe a week and a half. Now they're taking 2 to 3 weeks, sometimes
Yeah.
4 weeks to get that across the finish line. So yeah, that's that timing, as long as you let the clients know what to expect. The other thing too, that's important for me, and I think, everyone wants a contingency. I want a financing contingency. And if I'm helping and working with the landlord, we're selling a property, we typically will say, listen, we're not going to do a financing contingency. You've got your 45 days to figure if it's a yes or no from your lender. And we'll just say, we'll take your due diligence and we'll just combine that with the financing contingency, because most financing contingencies, it'll go all the way until the day of escrow. And so then you think you're closing today, and then you get a letter. Oh, by the way, the lender said they couldn't do it, or they didn't like what the lender told them because the lender realized they got to change their terms to meet all of the risk that they didn't realize the buyer had. Yeah, I try and limit that in the bud, working with sellers. However, for the buyers, all day long, unless I know it's going to kill the deal or it's going to make it hard. And we have to sit down. A lot of times too, the clients, Dave, they don't know what to ask you.
Yeah.
Like, if you are a really good lender, you know what to ask them or tell them, walk them through what happens, but most are left a little bit in the dark. And so they don't even know what questions they should be asking. So typically I try and get the contact information from the lender to ask some of the questions that have not been conveyed yet to what their expectations are. And some of that is timing. We had one client where the lender was telling her all day long, everything's good, everything's good. Well, the seller had been burned twice. And so the seller put into the contract and said, listen, here's what we're going to do is after you've had your due diligence, which they combined the financing in that, you're going to pay an additional $50,000 earnest. And you got to make sure that you're dialed in. So day 45, her lender's like, we're good. Thumbs up all day long. So she puts in her 50,000 and a week before closing, they called her up and said, yeah, we were wrong. We can't do the loan.
Yeah. Yeah, it's very difficult. It's very challenging making sure that you have all the things lined up for people to do that. And I think as we wrap up here, it's important for people to remember that you're going to get stuck at some point, especially if you don't have the experience, or I shouldn't even say don't have the experience. You just don't have a professional that's helping guide you along. And what's important to know is even the most seasoned people, which we really deal with, they have so many people along the way that are advising, consulting, coaching them, walking them through because they know they only have one pair of eyes. So to have other people coming in to say, I have a different pair of eyes on this, they could see something that they didn't before, and you would be stuck if you didn't have that, whether it's understanding how to know the numbers in that particular geographic market, whether it's trying to understand your underwriting and the metrics, how much time it's going to take, and making sure you have a buffer so that you don't get stuck at the last minute with
Yeah.
those situations. And so, Phil, I'm just really grateful for you taking the time and helping us maybe unpack for your perspective as you deal with this. And how would somebody get a hold of you if they're reaching out?
Well, I've got an investment team. If you wanted
Okay.
to head over to our website, it's leveraged with a D,
Mhm.
CRE.com, leveragedCRE.com. You can also give me a call. Happy to have a conversation or
Okay.
text me the last place is if you want to send me a quick email. It's my first initial Phil, so it's P, and my last name Tomlinson, TOMLINSON
Mhm.
at CPIAZ.com. And that just stands for Commercial Properties Incorporated Arizona.com. So, yeah,
Phil, thank you so much for taking the time. It was a pleasure speaking with you, and I'm sure this will be
you
a
too.
tremendous
Thanks,
value
Dave.